Hello everyone, welcome to another video. In this video, we will actually be looking at, let me try to get this one correct, okay. So yes, back to the video. Hello everyone, welcome to another video. In this video, we will be actually solving paper one, a multiple choice, which is multiple choice questions for your 7707, which is accounting. We will be looking at October, November 2002. I would also like to bring your attention towards that we will be solving variant 12, which is 1-2. And your exam has 35 multiple choice questions, as we can actually see in the instructions as well in here, right? So if you go down, it says 35 multiple choice question here. So we are going to go through all the 35 multiple choice questions in this video. Before I start solving the questions, I would highly appreciate if you are not subscribed to the channel, please feel free to subscribe to my channel. If the videos on this channel have been helpful to you, please feel free to share with them your friends who are also preparing for the O-levels accounting exam. Your subscription, your comments, your likes do matter, as they would be my motivation to make these videos for you and everyone else in the future as well at the same time. All right, so it would be great that if you could subscribe to the channel. So let's get started with multiple choice one. So multiple choice one is which transaction will increase both assets and capital by the same amount, right? By the same amount. So we have to search for something which impacts. So from A, B, C, D, we need to figure out a transaction or an option which impacts both assets and capital, right? So a credit customer settled his account after deducting a cash discount, right? So look at this, what this transaction is doing. This transaction is actually, in this transaction, the company is receiving cash. What is cash? Cash is an asset, so cash is definitely going up. And because the customer has paid, which means that the revenue has also gone up. In other words, it will impact the equity via retained earnings or net profit. So that will also go up with the same amount. And that is exactly the question what is asking. But we should also read through B, C, and D to understand if A is actually the correct answer, right? Now, sometimes when you read the multiple choice question and the first option is the answer, or it may seem to be an answer, it's always better to actually see through BC to other options as well. In this case, it would be BCD, right? So let's read through option B, C, and D as well to make sure A is correct. So goods were sold for cash at a higher price than their cost price. Now, so goods were sold for cash, cash asset goes up at a price which at a price higher than their cost price, right? So this is also about cost. So it's impacting cost of goods sold, not the capital itself. So therefore, B is not going to impact capital. So that's why it's not going to be the right answer. Now, rent received. Now, this is about rent. Right, so rent received included an amount prepaid from the next accounting period, right? So it was prepaid. That means it's not impacting asset in this case, really. If you look at the transaction, it would be rent expense and rent expense. So expense is not an asset transaction. Expense goes up in this case, but the prepaid rent, which is an asset, that will go down, right? So prepaid rent will go down, and rent expense will go up in this case if that's the case actually. So this is again not the correct answer, right? So rent received. So in this case, it's actually rent received. If it's not an expense, then it's just revenue going up in that case. But still, it's not impacting, the asset will go down. So it's not impacting capital and asset in the wrong direction. So therefore, C is not going to be the answer. For option D, the owner repaid a business loan. Again, this is going to impact, no. So, okay, this is going to impact, it's so the owner repaid, if you understand this, the owner repaid a business loan, so it's impacting liability. It's impacting liability of the business, not the asset, in that sense. So therefore, the correct answer to multiple choice one would be option A. right? It's increasing the asset, it's also increasing the capital at the same time by the same amount. And that's what we are actually trying to see for the correct answer. Okay, so let's move to, okay, let me erase this one as well. Let's move to option. Let's move to, let me remove this. Let's come to option multiple choice 2. So multiple choice 2, we are back to multiple choice 2. Let me just, yeah, pen, I have the pen here. Now, so multiple choice 2 on June 1st, 2021, Sue's capital account had a credit balance of 120,000. Capital account usually will have credit balance. So that is actually correct. So if we will draw a T account here, that will show something like this here. During the year ended on 31st May 2022. So this will become my opening balance, and then this is given me at the closing date, right? So this is my opening capital balance. She withdrew $1,800. So $1,800 would be on this side because it's going to reduce the capital, and the loss for the year was 14,200. This is also going to reduce the capital because when I read the question actually is asking me what was the credit balance. So it will still show on the credit side for Sue's capital account on 1st June 2022, right? So we start from 2021 and we need to calculate the balance, the year-end balance, or the opening balance for 2022, the capital balance, right? So it's going to be nothing. It's a very easy question. In this case, it's just 120 minus 1.8 minus 14.2. If you calculate this, this is going to give me 104. So the correct answer to multiple choice 2 is option A. Right. Let's move to multiple choice number 3. So multiple choice 3 is Bilal purchased goods on credit from Asim. So Bilal has purchased goods on credit from Asim. Bilal is purchasing goods from, which means that Bilal has to pay at some point in time, right? And Asim is actually selling. Where should Asim record this transaction? So you have to understand this. Bilal is purchasing. I'm sorry about my handwriting here in this case, and Asim is basically selling. So the question is asking you where Asim would record this transaction. Now Asim is, so, and this is on credit, so it's not going to impact cash book. So one is out of the equation. It's going to be there on general ledger because that's the prime entry book. It's going to be there. It's not going to be purchases ledger for Asim because it's not a purchase for him, it's a sell for him. And it's going to be on the sales ledger, definitely. So the correct answer to multiple choice 3 would be option D, which is 2 and 4. So 2 and 4. And the correct answer to multiple choice 3 would be option D. Let's clear the drawings here and move to multiple choice 4. Let's put this like this. Okay, so multiple choice 4 and 5. So multiple choice 4, Abdul sells goods to Rekha on credit. So Abdul has sold some goods to Rekha on credit. Some goods were damaged in transit. Which document would Rekha send to Abdul, right? So now some goods were damaged. So Rekha in this case would request for a lower payment, right? Because the goods are damaged. So in this case, what kind of note she is going to send to Abdul is going to be a debit note. It's going to be a debit note. That's if you understand the difference between credit and debit note, again, this question is not very difficult. So the correct answer to multiple choice 4 would be option B, because what Rekha in this case is asking for a lower payment, and in other words, she's asking for a credit as well, that she's going to pay Abdul less because some of the goods were damaged in transit. Right now, multiple choice 5, what is not shown in an invoice? So not shown in an invoice, right? So invoice is going to have amount of discount. It's not going to have date of payment made. It's going to have due date, perhaps, maybe if it was a due date, then, but this is not the question, right? So likely the answer for multiple choice 5 would be option B, but let's see C and D. Details of goods supplied. It's going to be detailedly listed in the invoice. Whenever you get an invoice, it tells you what kind of product or service that you have purchased. It's also going to state the terms of payment. It's going to tell you like within which period you have to pay. So that's what I was talking about, due date, right? It's going to give you that. So the correct answer for multiple choice 5 would be option B as well. Let's move on to multiple choice 6. So multiple choice 6. On 1st September, Peter sent a check to his credit supplier, John. This was correctly entered in John's books. On 10th September, the check was returned unpaid due to lack of funds. Which entries should be made in John's books on 10th September? So what is happening? You understand this. It's very simple, not complicated question. So Peter has sent a check to his credit supplier, John. So John received the check, right? So he received the check from his supplier. In other words, he received some money, and he would have recorded this, and he has already recorded. The question says this was correctly entered in John's books. Now, however, Peter didn't have enough money in his bank account. So John did not receive the money, right? So on 10th, and this happened on 10th September. So John needs to correct his previous entry. And the question is asking you which entries would John actually make in this case. So the correct answer to this option would be option D, because now these are all incorrect, right? So if you want to do options of elimination in this case, or elimination options, you would have to see the bank is going to be on the credit side in this case. So it's either C or D. Now, this is not a recoverable debts question. So again, if you do the elimination choices in this case, the correct answer for multiple choice 6 is going to be option D. But again, if you come from an understanding point of view as well, so John did not receive money, so this credit side is going to be correct. And John needs to create the receivable again, so he's going to debit Peter, because from Peter, Peter is a receivable for John. So it's in other words, Peter is a receivable for John. That's the case. So therefore, the correct answer to multiple choice 6 is going to be option D. Let's move to multiple choice 7. Okay, multiple choice 7. Which entries should be made to post the monthly totals of discount allowed and discount received columns of the cash book, right? So it's talking about the totals, where the totals would be posted. So it would be, so it's discount allowed. Discount allowed is an expense, and discount received is revenue. Which entries would be made to post the monthly totals of the discount allowed and discount in the cash book, right? So it's going to be, it's option C, debit discount allowed account and credit discount received account. This is an expense. And then discount received is actually something that you have received, right? It's a revenue. You have received discount from someone, and discount allowed is you have given discount to someone. So right, so the correct answer for multiple choice 7 would be option C. Let's look at multiple choice 8. Let me clear this previous drawings. Okay, let's do multiple choice 8. So multiple choice 8, Jaswinder maintains a petty cash book using impressed system. The monthly impressed of $100 is restored on the first day of each month. In the petty cash book showed the following. So the petty cash book has showed the following. Okay, how much cash did Jaswinder receive? How much cash did Jaswinder need to restore the impressed on 1st October? Right. So how much? So impressed is the monthly impressed of $100 is restored on every right. So it has to restore to $100, right? So total expenses were 83 and total receipts were 7. Right, so if it's 7, now if you just quickly do the math in here, if you just quickly do the math in this case, right? So total expenses, how much cash would, so they would need 80. So total expenses were 83, right? So um, now the fixed amount should be 100, right? But now the company has just when they're already received 7. So that's it has to reset to 7. So when you add 7, it's going to 107, right? So 7 is extra. And the total expenses were 83. So in this case, the answer actually is going to be uh, uh, option B, 76, not C. Actually, let me find an eraser. It's going to be option B. So 107 is received, and then the expenses were 107 minus 83. That's going to give me 107 minus 83. 24. So I have $24 in cash. Here's seems like my pen is not working. So 107 minus I think my pen is not working. I'm sorry about that. But this is going to be okay, now it's back online. It's going to be 24, right? So I have 24 in cash. I have this much in pending, but I need to reset it to $100, right? So just when there needs to reset it to $100, how much cash he would need is $76. So the correct answer to multiple choice 8 is going to be option B. It's the extra cash after these transactions have happened in September. For October, how much extra cash that he would need to set the interest at $100. So $100 is every time he's going to have $100 every month. At the beginning of every month, he's going to have $100, right? So I think the question is not that difficult. So it's $100 plus $7, which was the receipts. So now just when there has $107 in total, minus the expenses. So he's left with $24 of cash. $24 of the cash, but he needs to reset it to $100, so he needs 76 more dollars to bring that balance to $100, right? So that's the question. Let's look at multiple choice 9, but before that, let me clear this space. So multiple choice 9 is, let me bring the pen. So multiple choice 9, Sadiq's trial balance failed to balance. The debit column totaled 12,250, and the credit column totaled to 12,200. The following errors were discovered. No entry had been made for cash sales 150, so there was no entry for this, which means that I need to make debit cash and credit sales of this entry. So the debit column should also go up, and the credit column should also go up by 150 at least, right? So that's for the first entry. The total discount received account $50 had been omitted from the trial balance. So this is a discount received. It's credit in nature. It's credit in nature. So let's see what were the totals of the trial balance after the errors had been corrected, right? So after the errors had been corrected, what would be the totals? So for the first one, 12,250 plus 150, right, 12,400. So on debit side, I would have 12,400, which is nothing but, so you need to plus 150 in this case. Now on this side, it's only, for credit side, it's only 12,200 plus 150, perhaps plus 50 as well. To give me credit balance of 12,400. So because this is 200 plus 200 is 12,400, right? So the correct answer to multiple choice 9 is going to be option D, after the errors have been corrected, because this will only impact the credit side. The discount received will only impact the credit side for now. Right, so the correct answer to multiple choice 9 is going to be option D. Let's move to multiple choice 10. Okay, multiple choice 10. So multiple choice 10 is $68 paid by credit transfer for insurance was entered in the accounting records as $86, right? So the amounts have been which double entry will correct this error. So what has happened in this case that um, there was a credit transfer for insurance. So let's say insurance is an expense, right? So debit insurance and credit bank for correct amount should be 68, but this has been recorded as 86. So how much more has been recorded, right? So how much more has been recorded is $18. So $18 of expense has been more expense has been recorded. So I need to increase my bank by $18 and reduce insurance expense by $18. So once I have understood this, and if your basics of a double entry is very solid, then it's nothing but debit bank $18 and credit insurance by $18. So the correct answer to multiple choice 10 is going to be option A, as you can see. Debit bank $18 and credit insurance by $18. So it will correct the entry and the balances in the bank as well, right? So the correct answer for multiple choice 10 is going to be option A. Let's move to multiple choice 11. So multiple choice 11. After the preparation of her income statement, Emma discovered the following errors. A debt of $1,500 should have been written off as irrecoverable. No adjustment had been made for rent prepaid by Emma 28 of 2,800. The draft profit for the year was 35,000. What is the corrected profit? So the corrected profit in this case is going to be 35,000 minus 1,500 minus 1,500 plus let me see, 35,000, because it's a debt that should have been written off. So this would definitely reduce my profit, and then I need to add this number. So this is minus, so 35,000 minus 1,500 because it's an expense, and you add the prepaid rent that because there has been no adjustment made for this one, so we need to add that back because it's not an expense that impacts the profit and loss for the year, right? So this would give me 35,000 minus 1,500 plus 2,800, and this would give me 36,300. So the correct answer to multiple choice 11 is option C. Right. So let's move to multiple choice 12 now. Multiple choice 12 is about capital expenditure. As I can see, Hamid purchased a motor vehicle from an overseas motor manufacturer. Which expenditure relating to the motor vehicle is capital expenditure, right? So I hope you know the difference between capital and revenue expenditure. I'm not going to explain that in this one, but the question is fairly simple. Now, delivery charge is actually going to be is something that would be capitalized. That's a capital expenditure. It's coming from foreign. It's coming from foreign. It's an overseas. It's coming from an overseas location. So it is a must charge. It's a must charge. So therefore, the correct answer to multiple choice 12 is going to be option A. Petrol and replacement types. So these are actually revenue expenditure. Even insurance is going to be a revenue expenditure because this they haven't specified what type of insurance this is, but you can assume that they might be paying monthly insurance premiums, which makes it which makes it, unless it was a travel insurance, which is a very different scenario, but that's not the case in here. So the correct answer for multiple choice 12 is going to be option A, delivery charge, because it's coming from overseas location and it's a must expense. Otherwise, Hamid is not going to have access to the machine. Whereas for insurance, it's revenue expenditure only because you might have to pay monthly premium or yearly or semi-annual premium for that. So becomes like a concurring expense. Let's look at multiple choice 13. So multiple choice 13, when Tile purchased a motor vehicle of 35,000, he estimated it would be used for 5 years and then sold for 5,000. When Tile depreciated the motor vehicle using straight line method at a rate of 20% per annum, what was the accumulated depreciation on this motor vehicle at the end of year 2? So make sure that you're paying attention to the time, right? So it was purchased for 35,000. It has an estimated life of 5 years and then sold for 5,000, right? So it's going to be 30,000. So 35 minus 5,000, 30,000. 30,000 divided by 5 would give me my monthly expenditure for this. All right, so 30,000. So 30,000 divided by 5 is going to give me 6,000. So this is 6,000. 6,000 times 2, because it's asking me for year 2. That should be 12,000. So the correct answer for multiple choice 13 should be option B. So the accumulated depreciation that I would have, or Ventile would have, actually Ventile would have, not me, would be $12,000 for year 2 accumulated depreciation, because it will include year 1 and year 2 depreciation. All right, so let's move on to multiple choice 14. Let's move on to multiple choice 14 now. Okay, let's bring this up. 14. On the first day of his financial year, Jason purchased a new machine costing 20,000. On that date, his old machine had a book value of 6,000. Jason was allowed 4,500 for the old machine in part exchange. He paid the balance by check. Machinery is depreciated at 20% per annum. How much should be charged to Jason's income statement for the year, right? So it's asking how much would be charged to Jason's income statement for the year. In other words, the question is asking you what would be the expenses that would be charged to Jason's income statement. There would be two elements here. The first would be depreciation on new machinery on this one. So depreciation on this one, and the gain or loss on this transaction. So in this case, it's actually a loss. So the loss would be 6,000 minus 4,500, which would give me 1,500 of loss, I believe. Yeah, I think so. That would be the case, because 4,500 plus 1,500 is actually 6,000. So my loss is 1,500. That's going to be there. Now you see there's option A, which tells you 1,500, but we haven't, this would be incorrect because we have not taken into account the depreciation. Now, how would I calculate depreciation? Depreciation would be 20,000 times 20%. And that would give me the depreciation of $4,000, right? So 4,000, add these two numbers, 4,000 plus 1,500 would give me 5,500. That's how much I'm going to charge to the income statement, or that's how much Jason is going to charge to the income statement. So the correct answer to multiple choice 14 would be option D. Now let's move to multiple choice 15. So multiple choice 15 is Martha rents out part of her business premises. On 1st September 2021, she owed rent of 1,500, and on 31st August 2022, she owed rent of 1,800. So I am given, so this is opening and closing balances. So Martha opens the account with 1,500 and closes the account with 1,800. So she has opening balance of 1,500 and a closing balance of 1,800. During the year ended 31st August 2022, Martha received rent of 6,000. How much was transferred to Martha's income statement for the year ended 31st August 2022? So in other words, it's asking you how much revenue was, or how much rent was received for 2022, right? So it's going to be 6,000 plus 1,800 minus 1,500, the beginning balance. So that should give me 6 plus 1.8 minus 1.5, and that should give me 6,300. So the correct answer for multiple choice 15 is option C. 6,300 is the actual rent received for Martha or by Martha during 2022, and that would be the amount reported in income statement. Right, so the correct answer for multiple choice 15 would be option C. Now let's move to multiple choice 16. Multiple choice 16 is about uh, Parker received cash from Alexei for a debt that had been written off as a recoverable, right? So it was written off irrecoverable before, but maybe Alexei got some money and she decided to pay, or he decided to pay Parker, because we don't really know the gender in this case, right? So, how should Parker record this transaction? Now, it would be the cash is actually going to go up because Parker has received cash, right? So it's either A or B. So it's either A or B, right? It's going to be B because debts have been recovered. So it's going to be this account that will be used. So the correct answer for multiple choice 16 is going to be option B, debit cash, because the company has, or the Parker has received cash, and credit debts recovered. Okay, so the correct answer for multiple choice 16 is going to be option B. Let's look at multiple choice 17. 17 is why should inventory be valued at lower of cost and net realizable value? So this one is actually, okay, we will see those accounting principle questions towards the end, because that's how it is. Most of the accounting principle questions will come towards the end, at the end of the paper. But let's look at multiple choice 17 already. Why do we use lower of cost or net realizable principle, right? To avoid undervaluing of the inventory? No, that's not really the case, because lower of cost and net realizable value, we are trying to overvalue of the inventory. We are not supposed to overstate the value. So A would be incorrect in this case. To comply with the historic cost principle, no, because this applies to fixed assets, and inventory is not a fixed asset, it's a current asset. To comply with the principle of materiality, no, because this has nothing to do with materiality concept. To ensure that profits are not overstated, and that's the correct answer. Multiple choice 17 has the correct answer of option D, because we are not trying to overstate the inventory. In other words, we are also not trying to overstate the profits, because if you understand the relationship between ending inventory and the profits, inventory valuation and the profits, it should be somewhere in the notes that you are studying from. Uh, it's We are trying to avoid that more specifically, right? So the correct answer for multiple choice 17 would be option D. Let's look at multiple choice 18. How would current assets be listed if they are arranged in decreasing order of liquidity, right? So decreasing order of liquidity means that highly illiquid asset which cannot be liquidated very fast or very quickly, right? A decreasing order of liquidity. So decreasing, if they're arranged in decreasing order of liquidity. Okay, so this means the most liquid asset. So most liquid asset will come first. Most liquid asset uh, will come first. So yeah, that's what it means. If it was increasing order of liquidity, then it means that the most difficult asset to be liquidated at first, right? So most liquid asset will come first, and so C and D is not going to be the right answer, because it takes time for inventory, trade receivables to get liquidated very fast. For A and B, so bank and cash, actually cash is the most liquid form, because even with banks, it will take some time for the transaction to be processed, or you might have to go to the bank to get the to get the money, so it will still take time, right? So cash is king. So in this case, the correct answer for multiple choice 18 is going to be option B. So cash first, then bank, then the trade receivables, and then inventory, because of course it takes, so trade receivables, because the goods have already been sold. So you don't have to do the work to sell your goods. But for inventory, if it's sitting there, one has to first go out to find a customer to sell the product and then receive the money, right? So it takes a lot more time there. Whereas for trade receivables, you might have to make some effort, like calls, emails, to ask for the payment. So therefore, the correct answer for multiple choice 18 is going to be option B. Let's look at multiple choice 2019 actually. So we did 19, 18 first, now 19. Let's look at 19. So 19, during the year, Sam paid advertising expenses, some of which related to the following financial year. Sam made an adjustment for this for for this for this when preparing his financial statements for the current year. What was the effect on Sam's financial statements of making this adjustment? So there were some paid advertising expenses, of which some of which were related to the following financial year. So they should not be in the current year statement. So there should be increase in profit. So we are looking at this column, not this column, right? So you can eliminate option C and D right away, because we won't be looking at this column. So it would be increase in profit. Right now we have to decide between which one is correct between A and B. Now some of the expenses were paid in advance, so it's also going to Sam made an adjustment, so paid an advertising expense, some of which were related to the following financial year, right? So Sam made an adjustment of this when preparing so it's going to impact current asset and not current liability. So we will look at these two columns now. These two. So the correct answer for multiple choice 19 is going to be option B, increase in profit and increase in current assets, because some of the expenses were prepaid expenses in this case. Right, so prepaid expenses, they should not be on the income statement. They will show up in the next year's statement, and they will show up on the balance sheet and current assets. So the correct answer for multiple choice 19 is option B. Now let's look at multiple choice 20. So multiple choice 20. Members of a limited company have limited liability for the debts of that company. What does this mean? So members are equally liable for the debts of the company. No, that is not true. It's a company which has a limited liability. Members are liable up to the value of their personal assets. Their personal assets are not at risk. That is classically not the definition of limited liability. Members are liable only up to the amount they agree to pay for their shares in the company. This sounds correct. I would say members are liable only up to the value of the debentures. No, so debenture, we are not talking about debentures in this case, because then it's about to pay for their shares of the company. So their personal assets are not at risk. So the correct answer for multiple choice 20 is going to be option C. Right, so let's move on to multiple choice 21. Let me repeat this again. Multiple choice 21. So multiple choice 21. A limited company provided the following information. I have non-current assets. I have ordinary share capital, debentures, and net current assets, which is nothing but net of current assets minus current liabilities. What were the retained earnings? So again, in this case, I would actually need to use accounting equation, which is assets equal to liabilities plus equity. Now, liabilities plus equity I have been given. So this is my equity and this is my liability within equity, and I need to calculate the retained earnings. So retained earnings number would actually, so this equation would be not in balance. And this equity should include retained earnings as well, right? So this 40 plus 10 is actually 50, and assets number is going to be this one here. Total assets is going to be this. So total assets in this case is 35 plus 30, which is 65. So you see there's a difference. Now there's a difference. 65 minus 50, the difference is 15, right? So my retained earnings, or the limited company's retained earnings, are 15,000. Again, not a very difficult question, actually. If you just look at it, you'll just need to use the accounting equation in this case. The correct answer for multiple choice 21 is option A. So multiple choice 22, what is included in the equity of a limited company? It includes ordinary share capital, it includes retained earnings, and it also includes general reserve. So the correct answer for multiple choice 22 is option A. If you know, this is a very standard question and it has a standard definition. Equity is not going, debentures is a liability. debenture is a liability. So automatically C and D is incorrect. Even B is incorrect, because it's not tick mark. It's not, this one is not ticked in this case. So that's why B is incorrect. Right. So C and D is incorrect. Now you only need to decide between A and B, and that what the deciding factor in this case would be the general reserve. So general reserve is included as part of equity. So the correct answer for multiple choice 22 is option A. Let's look at multiple choice 23. So multiple choice 23, the financial year of a club ends on 30th September. During the year ended 30th September 2022, the club received an interest-free loan from a member. In which of the club's financial statement will this appear? So where the loan would appear? The loan would appear not in income and expenditure. They don't use the term called statement of financial position. So NGOs or club accounting, that's what we are talking about. They don't use the term statement of financial position. Instead of that, they used receipts and payments account, right? So for B, it's going to be in receipts and payments of account, but not in income and expenditure. So statement of financial position, of course, we are talking about a balance sheet in this case. So it's going to be in receipts and payments of account because this is the cash flow statement. And then it's also going to be in the statement of financial position liability account. So yeah, so it's going to be there. Therefore, the correct answer for multiple choice 23 is actually option C. So option A, so this is correct, but it's not going to be in income and expenditure account. So therefore, the option A is going to be incorrect that case. So it will appear on statement of financial position for sure, because that's the balance sheet, and it's going to appear in the liability section, as I say here, but not in the income and expenditure account. So the correct answer for multiple choice 23 would be option C. So it will show up in statement of financial position and receipts and payments account because the company has received the club, actually in this case it's a club, so the club has actually received those payments. Income and expenditure is just income statement for club accounting. So let's move on to option let's move on to option multiple choice 23 or 24, sorry. So 24, a club had an accumulated fund at the start of the year 18,000 and at the end of the year 16,200. New equipment costed $1,100 during the year. Total expenses were 9,550. What was the income, right? So again, this question is very easy. What was the income from subscriptions, right? That's what the question is asking. So first thing you need to understand that this is not going to be taken into account. $1,100, it's not going to impact because this will not impact the income and expenditure account. So it's not going to impact income and expenditure account. So it's going to be 18,000 minus 16,200, which means that it has gone down. So the accumulated fund, or you can call it the retained earnings, if you understand from that perspective very better, then the retained earnings or the accumulated fund has gone down by $1,800, and the expenses were 9,550. How much were the subscriptions, right? So subscriptions in this case would be so this is basically net income, right? So income minus expenses gives me this number 1,800. So income is going to be so this is my net number, 1,800 minus 9,550. So my income is going to be 7,550, right? So income has to be less than the expenses because that's how it will go down, right? So the correct answer for multiple choice 24 is going to be option A. So the total amount received during the year in subscription was 7,750, and then the expenses after expenses which were 9,550, I got a negative $1,800, which impacts this balance, and it goes down to 1,600, right? So I have already cross-checked the answer here. So it should be 7,750. So the correct answer for multiple choice 24 is option A. Again, if you have to look at the logic, you just calculate the difference between opening and closing fund balance, and then take into account the expenses for, into that decrease, and that will give you the income for that year, right? Um, let's look at multiple choice 25. Okay, so 25. Dan makes t-shirts which are stamped. So he makes t-shirts which are stamped with a design using fabric paint. He provided the following information. What was the total direct cost? So we need to calculate the direct cost. Now, fabric for t-shirts, that is actually important. So that's our direct cost. It's going to be included because he's producing t-shirts, right? So he's not producing t-shirts, but he's making t-shirts which are stamped with a design using fabric paint. So fabric paint is also going to be a direct cost, then wages of machine operators as well at the same time. Right, so in this case, my direct, so 16 plus 4 is 20, 20 plus 10 is 30. So the correct answer to multiple choice 20, option C. Right, the correct answer for multiple choice 25 would be option C. Let's move on to multiple choice 26. In a manufacturing account, carriage on raw materials was incorrectly treated as a factory overhead. How did this error affect the prime cost and the cost of production? Now, cost of production is not going to be affected. So it's either A or C, because total costs will include everything, right? So even if you misclassify here as, so carriage on raw materials were incorrectly treated as factory overhead, but factory overhead is already included in cost of production. So cost of production will not be affected, but it will impact the prime cost. Now, prime cost is actually going to be either it's A or C. It's not going to be overstated. It's going to be understated because you have transferred the carriage on raw materials from, so the prime cost is going to be understated. So the correct answer for multiple choice 26 is going to be option C. So no impact on cost of production, whereas prime cost as understated. Let's move to multiple choice 27. Again, this looks very a question where I would have to use a counting equation, I think. Yeah. So I have to calculate profit and loss. I'm not giving, so I am given assets. So this is an asset, this is an asset, this is an asset, this is a liability, this is a liability. And the difference is going to give you that number. So if I quickly do the math in here, so for 2021, it gives me 12.2, I think. 12.2. Yeah, it is 12.2 in as total assets minus liabilities. So the equity, equity in this case is this much. For 2021, the equity is, so what I'm trying to do is asset minus liabilities equals to equity, right? So I have already given you the total assets here and the total liabilities here, right? So total assets, so this number is 14, and then this is 1.8. If we minus this, you will get this, right? And then here for 2020, so this number is 15.3, and then this number is 2.8, and that would give me 12.5. Right, so the difference here, so if I have to calculate the difference, so 12.5 minus 12.2, is 0.3, which in other words, $300 of profit. So the correct answer to multiple choice 27 is option B. So there's this company has actually earned $300 in 2022 as profit, right? So it's not a difficult question. If you know the accounting equation, then it's fairly easy to attempt this question. Let's move to multiple choice 28. So 28. Aruna does not maintain a full set of double entry records. She provided the following information. What was the cost of her purchases for the year ended 31st July 2022? So it's a payables account. So trade payables started with 2340. Payments made to suppliers 168,000. And then closing balance was this much. So we will calculate the credit purchases here. So this X is credit purchases. And then we will add the cash purchases to it to calculate the cost of our purchases during 31st July 2022, right? So if I do the math in here, let's just quickly run the numbers. 168 plus 168,000 plus 27290 gives me minus 23450 gives me 171,840 of credit purchases. Now I need to add 16,000 in this. So plus 16,000 gives me this 187,840. The correct answer for multiple choice 28 is option D, 187,840, right? So that's for 28. Correct answer is option D for multiple choice 28. Let's move on to multiple choice 29. So multiple choice 29 is asking us to calculate the average inventory. Okay, so first I need to calculate so my gross margin is 20%, which is gross profit over sales. So first I will calculate gross profit, right? So how much is my gross profit? 250,000 times 20%. My gross profit is 50,000. So that's my gross profit, right? How do we calculate gross profit? Gross profit is sales minus cost of goods sold. So I have got the gross profit, which is 50,000. Sales is $250,000 for me to calculate COGS. So my COGS in this case is going to be $300,000, right? So I have $300. So average and I have given rate of inventory turnover. So it's going to be 5 COGS times average inventory, right? So COGS, $300,000 divided by 5 is going to give me should give me the answer actually. Right, so the correct answer for multiple choice C is actually for 29 is actually option C, 40,000. All right, so again, just to quickly go over this question would be right. So 250,000 times 20%. 50,000 is my gross profit. 50,000 is my gross profit. Right, so my sales, so my COGS is not $300,000. That's a mistake. Actually, it's going to be $200,000. It's 250. So 200,000. So 200,000 divided by 5 will give me 40,000, right? So 200,000 divided by 5 is going to give me the average inventory, which is this number, as 40,000. All right, so the correct answer for multiple choice 29 is going to be option C. Let's move to multiple choice 30. So multiple choice 30 is Naima provided the following information. I have revenue, I have gross profit, and I have profit for the year. Okay, so I need to calculate the profit margin, right? So profit margin is going to be nothing but I have 11,900, which is my, okay, so I already have the profit. So 3,500 times 28 over 28,000 times 100 should actually give me the answer. 12.5%. So the correct answer for multiple choice 30 is option A, 12.5%. It's fairly easy question. If you remember the formulas, it shouldn't take you more than a minute to answer this question, actually. Um, so let's move on to multiple choice 31. When calculating the liquid asset test ratio, what is compared to the liquid assets, right? So what is compared to the liquid assets? Uh, what is compared to the liquid assets? It's going to, so we are actually not concerned about this. It's a current, so it's going to be current liabilities. The correct answer for multiple choice 31 is option A. We don't look at intangible assets, non-current. These are we are calculating asset test ratio. Asset test ratio is current assets over current liabilities minus the inventory in this case, because it's asset test ratio. So we compare it with current liabilities. Let's look at multiple choice 32. So multiple choice 32, what would explain these changes, right? So we look at the changes. So gross profit has gone up, gross margin has stayed the same, no change. That is interesting because the gross profit has gone up. So i.e., this means that my cost of goods sold might have not gone up. That's a possibility, or that would have probably stayed the same. Profit margin has also gone up. That's also good. So that, what does that mean actually? An increase in selling price and decrease in sales quantity. An increase in selling price and decrease in sales quantity, no, that will actually drive the revenue, and then it will impact the gross profit. So that should go down as well. An increase in selling price and an increase in selling expenses, this is possible, but increase in expenses will not justify increase in profit margin. So that's also false. That is probably not happened. An increase in sales quantity and a decrease in selling price. An increase in sales quantity and a decrease in selling price, that will again drive down my revenue down. So that will also not help. So I'm only left with option D, an increase in sales quantity and a decrease in expenses, right? Yeah, so an increase in sales quantity will drive up my revenue, and a decrease in expenses will drive up my profit, right? So that actually explains the changes here. So correct answer for multiple choice 32 is option D. Let's look at multiple choice 33. So 33, a business renewed an insurance policy. The total amount paid was charged as an expense and income statement for the year, even though half related to the next financial year. So that should not be the case. Which accounting principle has not been applied, right? Because for next financial year, it should appear in the balance sheet only, not an income statement, and it will be carried over. That other expense, which belongs to the next year, should be reported in next year. So the principle that has not been followed in this case is matching principle, because that's what it says. Matching principle says current year's revenue should be reported in current year's income statement, and current year's expenses should be reported in current year's income statement. So matching is not being followed here. So the correct answer for multiple choice 33 is option C. Let's read multiple choice 34. What is meant by a business entity principle? All aspects of the business are recorded in money terms. Goods taken by the owner for personal use are not recorded. It is assumed that the business will continue. Okay, so all these are actually wrong. This is talking about going concern. This is talking about duality, which is this one, duality concept. So it's about business entity principle. So transactions are recorded from the point of business, from point of view of the business. The correct answer for multiple choice 34 is option D. Let's look at the last question of this exam, multiple choice 35. So multiple choice 35 is, which statement is not correct about reasons for using international accounting standards, right? Assist in making comparisons between companies, which is exactly why you should actually uh, improves the reliability of accounting information. True. Narrows the areas of difference in financial reporting. True. Makes the preparation of financial statements less time consuming. No, it makes it more time consuming. So the correct answer for multiple choice 35 would be option D. So it says which statement is not correct, right? So which statement is not correct is option D. So the correct answer for multiple choice 35 would be option D. I hope if you have watched this video until the end, I hope this video was helpful to you. Um, if you think this video was helpful to you, please don't forget to subscribe to my channel, like this video, comment down below, and feel free to share this with your friends as well. And let me know what other topics you would like me to make videos on, and I would try my best to make videos on those. And once again, thank you very much for watching this video till the end. I hope this was helpful to you in preparing for your exams. Thank you very much.